Yeah. Happy Thursday, everybody, and welcome to the Dollar Hour. I am Deontay Burton, aka Mr. Short Dollar himself. Tonight we got an awesome show. We're talking about I'm about to forget income tax law changes for 2023. Again, these are income tax law changes for 2023. We're right at the beginning of the tax season, which the IRS has stated that on Monday, January 23rd, they will start officially receiving tax returns. Okay, so that's the official start date.
We can all get new challenges.
Yeah. We'll go hallelujah. But yeah, that's it. Monday, January 23rd is the official beginning of tax season because IRS will start receiving tax returns. So what I wanted to do was have a quick little video, or not a quick little video, it's going to be the regular show. And we're going to be discussing some of the tax law changes for 2023, okay? But before we get started, I want to say what's up to my awesome producer, DJ Lamb.
What's going on, brother?
Hey, man, best day of the week.
Thursday.
Yes, sir. Yes, sir.
The most informational day of the week.
Hey, man, that's what I'm talking about. That's what I'm talking about. Man, I appreciate that, Lamb. I appreciate that.
The most informational day of the week.
I appreciate it.
Also, you ain't here, you ain't learning nothing.
That's what I'm talking about. Also, give a shout out to mother producer Slick 316. What's going on, Reek?
In the building.
Hey, but yeah, man. I was thinking about it, man. Been getting revved up with everything with tax season. I'm a little behind with a couple things. I haven't got everybody as far as they're supposed to be working, fully trained in my life.
Okay.
With everything we're doing there and there. Hopefully, we can kind of knock out a couple things within the next 72 hours to kind of get everybody a little bit more abreast with some things. But I'm looking forward to it. And everything. But as always, this is my bread and butter time.
Yeah.
Tax season. So,
That's right. That's right.
Getting mentally focused for doing it, putting in those long nights. Like I always do with tax season. So I can't do it like I used to.
Can't do it.
Shit, no.
You can't work
12
20 hours and then sleep too.
It wasn't even 12, boy. It was 20.
20.
20.
Okay, yeah, I'm in 20.
Real
I'm in 12 in the office, and 6 at home.
Now, real talk, man. I can't do it like I used to, but I still got the same enthusiasm in regards to tax season. But I just don't have that motive.
Okay.
Like I had, we've been in business over 20 years. Like then, back in the day with the money.
Trying to get to
rapid refund, right. All kind of whatever.
Right.
Like now it's a whole lot more. Regards to regulations and stuff like that. It's cool, business, but it's different now. But as always, I get excited for it. I'm ready to get it started. Hey guys, listen again. We're talking about income tax law changes for 2023. Feel free to call in. The number to the show is 678-740-9894. Again, the number is 678-740-9894. Let me post that in while I'm sitting here thinking about it. And Instagram. If I can do that, pin that comment. It should be listed, hanging already in the TikTok. Right now we're streaming live on Facebook, TikTok, YouTube, Instagram, LinkedIn, and Twitter. The main hub is the Mr. Short Dollar YouTube channel where we talk about personal finance, business, entrepreneurship, investing. We have over 600 videos on the YouTube channel. We have a grant playlist with over 150 grant opportunities. Also, we have videos covering business finance, business operation, and business management. Make sure, regardless of what platform you're looking at and wherever time you come in, make sure you go to the Mr. Short Dollar YouTube channel, subscribe to the YouTube channel, and take advantage of all the great information that we have there. Even if you had to step away from tonight's show, you can always go back to the YouTube channel and then, get the same information, anything you may have missed, okay? But see, and one of the reasons why I want to have this show is because, we talk about business and finance and taxes and stuff a lot, but a lot of times people, they think they know, but they don't know. And I'm going to say this, that every year, I get a call, especially this time at the beginning of tax season with potential new clients. And a lot of times what happens with those potential new clients is pretty much the same story. My tax man did this, my tax person did this, and I don't try to figure out how I did this, how I did that. And I have to let people know, because what I don't want to have happen is you come to me with the same gripe.
Right.
And most of the time the gripe is due to lack of knowing exactly what's going on. And what I mean by that is your refund ain't the same what your cousin or your sibling refund is because you have different things going on. And in this business, the income tax preparation business, people a lot of times, depending on your clientele, if you got a clientele that's expecting refunds, the more money they can get, the greater they feel.
Okay.
If you have clientele that they're making a lot of profits in their business, they typically owe a lot of money. The less money they owe, quote unquote, the better you are, and the better you supposedly are. So a lot of times it's not really based on what you've done; it's what they perceive that you've done.
Okay.
Make sense?
Right.
So when people come, they'll ask like, "Hey, I got a smaller refund that I got last year. It's strong." And what happens a lot of times with people, just me being an accountant, and this happens a lot of times with on my side, people don't know how to speak English. We can speak accounting, don't know how to speak English.
Right.
And depending on who you went to, especially when one of them fly by night tax folks, I don't like talking about nobody business, but these folks that had damn 10 hours of training before tax season,
Right.
and they really can't explain to you why. They just said, well, the computer said it, or that's what the things say. That's what the things say, and typically, and here's the thing about it. They may be right. The thing did say that it is the correct thing, but they really don't know how to explain what happened.
Okay.
And a lot of times always there are tax law changes, regulation changes, process changes that affect the end number. And many a time people don't know how to explain it to a customer. Or a customer don't really care to know. You try to tell people, hey, listen, man, there are different. I heard, I know. Just let me know when they're ready. I hear it, and I heard today. Just let me. I know. Just let me know when. So you go through those particular things. That Glenn Levitt, yes, but and your clients be from both ends of the spectrum. They want to know everything, and they can care less. Just let them know, and it's on you, how you disseminate the information. But at the end of the day, the end result.
Right.
And when people have those expectations of they want a certain number, and they feel like you wrong, but they can't tell you why you're wrong. You're wrong because you want to hear it. I'm gonna be honest with you, man. Again, we're talking about income tax law changes for 2023. I've had many a customer. Well, I went to this one person. They gave me this. They told me that. Now I always ask the $1 million question. Are they right and am I wrong, or are they just telling you something you want to hear?
Right. Make you feel bad.
And I'm straight up. I mean, this is what I do. I ain't, just got a laptop doing it in my kitchen table. Even though that's how we started.
Right.
20 years ago.
But that's not how you continuing.
Exactly. But see, the thing of it is, I asked them, well, whoever says something different or says something wrong, have them give me a call. We'll talk on the three-way and let them tell me where I'm wrong with. Just let me know. Because I stand behind my work.
Right.
I stand behind my work. But, well, they said you wrong. They said you did. Have them get on the phone. Well, they talk third party. And we can all talk. And what it is, a lot of times people been done did something fraudulent or missed out on something, whatever, but because you see something that's in your eyes a better number, you're cool. But then I also get them same kind of calls, after tax season.
Right.
Man, this man have messed my stuff up. I should have listened to you. I should have did this. I should have came back. It's part of the business.
Right.
I done heard it all. People leave, come back, leave again, come back, all kind of stuff. But I'm very, very adamant about, I want my clients to know what's going on, what's different. Now, if they care to know it or not, that's a whole different story.
Right.
Yeah. But that's why I want to have even like a show here today because, it's not even about if you come to us to get your taxes done. The key thing is we're just having this conversation so you can kind of have an idea of what's different, right?
Do you think the general public or your customers or, our community even realizes how much the tax laws changed year over year?
No, they don't realize. I don't think they care outside of what maybe directly affect them.
Okay.
If they're gonna make sure they're gonna have more money, like people concerned if they're gonna get a stimulus check, people concerned if they're gonna get a bigger credit here, so they heard about it. That's what they're concerned about. Nobody, and they usually go by word of mouth. But do any kind of investigative stuff, reading,
right?
Hell no.
Like small business owners, we have a lot of entrepreneurs that came out during the pandemic, and some of them are continuing their business practices. Like, do you think even they know the tax laws in which they have to deal with?
Absolutely not. Absolutely not. And the funny part about that is a lot of times you got people, probably maybe some professional that tried to let them know what's going on. But again, people, it's not a concern to them.
Mm-hmm.
Sometimes people get concerned if they feel like something having a negative impact, i.e., a tax bill.
Mm-hmm.
Outside that, people don't care to. They don't care to get informed about what's going on and stuff. That's the world we in.
No, okay.
It's 20 some years in the game. Every now and then, and here's the key. A lot of times, the more you're informed, the way it can help you maneuver going forward
Mm-hmm.
in certain decision making. But again, people don't want to do that.
I believe that you should learn a little bit about tax law because people. I know they think it and they may hear it here and there on commercials, but people don't really realize how one day you could be walking to your job and you get a paycheck, get a letter being like, nah, IRS and took 43% of your paycheck and goes to the bank and your accounts is empty. People don't realize how much power and that's it affects them. They may hear about it in passing, but they really don't realize how much power the IRS has and how much they can levy so much of your daily life, your income, wherever you have income at, whatever you have your name in, they can levy all that stuff. That's why I believe that it's a big reason to learn a little bit about it.
Well, we talk about intentional ignorance, a lot, and what I mean by that, I think the less people know about tax, the more comfortable they are, with not being held accountable for certain things. What I mean by that is, the gist of it is the reason why taxes are charged is to pay for a lot of free services that we have. Public servants, highways, roads, electricity, even though depending on where you at, your schools and all that stuff, on different levels from the federal, the state, the county, city, everything, police, ambulance, hospital, all that's paid with your tax dollars.
Mm-hmm.
The income taxes, sales tax, property taxes, some way that's paid for it. People don't want to be informed by it because again, now that makes you certain levels accountable.
Mm-hmm.
I.e., when we see people that probably doing the best, the best communities, best school system, those are people that's informed because they understand that direct actions impact that.
Right.
How much money I'm making, how my house and my community look, how that's affecting my property values, my kids' school and stuff like that,
Mm-hmm.
what kind of business. They understand that. But again, they're taking accountability for those particular things. But a lot of times when people don't want to do that, that's what happens.
40 says they're about to shut down the IRS.
Well,
I don't think so, 40. I agree with some of the points that you make, but they don't want to have the 87,000 new IRS agents. But I think we all need to realize that, Republicans, Democrats, they all benefit from the IRS. So it's not, all their incomes are paid through the IRS. I mean, taxes being levied on us is what pays most of these guys' income. What gives them free insurance, health insurance, why they tell us we don't need it, they get it for free. There's a lot of things within the government agencies that the taxes pay for. So they're not going to shut down the IRS. They can preach it all they want to. That's not going to happen.
Well, just say theoretically shut down the IRS. The replacement may be 100 times worse.
Mm-hmm.
We might have 50% taxes on everybody.
Right.
Or like they do in Europe. Maybe something higher than that. You might get all your free services as far as college and medical and all those kind of things, but half of your check or more than half of it go to taxes. Just a flat tax rate.
Yeah, they say.
Do you really want to go in that world?
You're like a national sales tax or something like that. National sales tax where you don't pay taxes until you buy something. You remember that thing they were pushing a while back, a few years, maybe 10, 15 years ago, where they wanted a national sales tax where you make 35%. When you go to the store, you pay 35%, taxes on the item. I don't think it was 35%. I'm just throwing out a number. And if you don't go to the store, you don't pay taxes. That's what they were saying. Like, if you don't buy nothing, you don't pay taxes. But as soon as you buy some, you pay taxes. And then the whole thing was, but that's not, the rich are not going to pay. And then the rich are not going to pay their fair share. And then they was like, well, the rich are going to buy higher price things than you, so their taxes are going to be higher. So their bill's going to be higher.
Yeah, and when we do changes, theoretically, they may or may not work, but people got to be ready for the changes. Always understand when one thing goes, another thing got to replace it.
Mm-hmm.
When we cut fat from here, we got to put it somewhere, maybe pick it up somewhere else. And that's just something to think about. Just because, it's gone, that doesn't mean there isn't going to be. You still got to pay for services.
Mhm.
Could be different. What's the comment?
He said the IRS is not a government agent organization. They are a business that operates under the government. Um,
I don't know where that come from.
I
mean,
believe that the IRS is a government agency because they actually have to go through a funding through the Congress and Senate in order to get those things, and those things are only done. It's only done because of government agencies. I'm just speaking from. I don't want to say, where I work, but we have to go through a process of getting funding for certain things, and that's through Congress. And I'm going to tell you who's not a government agency, who doesn't have to go through Congress to raise stamps, is the Postal Service. They don't have, when they raise a stamp, they don't have to go to Congress and say, "Hey, Congress, hey, Senate, I need to raise the stamp to $2." They just do it. That is not necessarily a government agency, but any government agency has to go through Congress and the Senate in order to get funding to do anything.
Yeah, but they're government agencies. They're right connected with the U.S. Treasury with doing it. I think sometimes, before we go too deep into that, uh, I just think that when we say, okay, let's get rid of this and get rid of that, what will we do?
Mhm.
And I don't think people put a lot of thought into, okay, if you get rid of IRS, we don't do that. Like you say, okay, we're gonna do flat tax, we're gonna charge a certain percentage on sales. However, what are we gonna do?
Right.
Okay, because sometimes we don't look at it again. If this is gone, because this pays for this. If
Mm-hmm.
this is gone, how we gonna function with this? Or where we gonna pull the money from? How we gonna do that? And I just think sometimes people just have a problem with order. And again, doesn't mean everybody want to be chaotic, but sometimes when we look like, hey man, this is just too much out of my check or whatever. Sometimes we don't necessarily look at, okay, hey, how I'm benefited from this.
Mm-hmm.
You may not need it now, but sometimes you do, sometimes you don't.
Mm-hmm.
But when you use it, it's worth it. But I I try to get into them conversations like, okay, they need to get rid of it. But, okay, but this is what we're gonna replace.
Mm-hmm.
And many of the time you don't necessarily get the replacement. Just like, okay, we will just do this, and we can't just live without. How are you gonna pay for services? How are you gonna pay for those particular things? How are you gonna pay for these federal? Again, then we stop. Like no one has a solution for that.
Right.
And when they do, and it may be viable. It's just gonna be different. It comes from that point. How comfortable are people gonna be with the change, right? So with that said, guys, again, this is the Dollar Hour. I am Deontay Burton, aka Mr. Short Dollar himself. Tonight's show we're talking about income tax changes for income tax law changes for 2023. Excuse me again, we stream live on Facebook, YouTube, Instagram, TikTok, LinkedIn, and Twitter. The main hub is the YouTube channel, Mr. Short Dollar. Make sure you go there and subscribe. You're welcome to call in. Guys, listen, one quick thing. Feel free to make comments, feel free to call in. But if it's outside the realm of what we're talking about, please hold those questions up to the end of the show. And I promise you I'll get back with you with that. What's that? Maria Padar, and I apologize for mispronouncing your name. I've heard of that too. I think we're talking about as far as like with the income tax and stuff. I think everybody throw out ideas. I'm just saying that at the end of the day, once we know exactly what it's for, what will be the remedy?
Mm-hmm.
What will be the way to sit here, replace it with, right?
Right.
With that said, there are a couple of things, just before we go into depth with everything, there are a couple of main changes, that I want to go over with everybody. First is the rebate recovery credit, and that's credit. That credit did expire. It cannot be claimed in your 2022 tax return. The rebate recovery credit, pretty much your stimulus payments, right?
Okay.
If you did not, those were to be received over particular years. If you did not receive your stimulus payments, you just need to reach out to the IRS and let them know. But that did expire as of December 31st, 2022. Okay. So just let everybody know that none were issued out in 2022. It was just in what was that, 20 and 21
Mm-hmm.
that they were issued out. And they will be applicable to your 20 and 21 tax returns. So again, that rebate recovery credit, that has stopped. I know a lot of people, that's a hot topic with everybody. Are they gonna get out any more stimulus checks? Are they gonna have any more free money? They haven't in a year. I'm not saying they wouldn't do it again. That's right now. I don't see it going. What I'm doing anytime soon. So, and a lot of changes did come. Keep in mind, guys. We had the was that December 2020, the American Rescue Plan Act, or was that December or March, the American Rescue Plan Act? Well, that was the last one. We had the whole stimulus package. I forgot the name of it, but the last one was the American American Rescue Plan Act. That was before the one with the inflation adjustment. That's when you had a lot. But with that, then we had a lot of changes. The last stimulus payment, and I think also with the some of the other adjustments in regards to the tax credits
Okay.
that we enjoyed last year, right?
Yeah.
And we'll get to those well. But again, that rebate recovery credit, we're going to depth with everything afterwards. After I, go over the introduction with it. Also, earned income credit, everything's back to the 2020 guidelines.
So the raise that they gave you in 2020 and to 21 and 22 has gone.
It's gone.
Okay.
Everything else December 31st, 2022 has expired. So we're back at the guidelines for 2020.
Okay.
Child tax credit, same thing. The enhanced provision that you had, they have went back to the 2020 limits.
Okay.
So again, you're not gonna get as much money.
Okay.
You're not gonna have those same changes as far as with the age and stuff. We're going to that, but we're back at the 2020 limitations. Child dependent care, dependent care credit. We're also back. Those enhancements have expired and returned back to the 2020 guidelines.
Mm-hmm.
If you ever notice, we're going back to the trend. We're going back to everything that happened pre-pandemic.
Okay.
Okay. So again, so if you, not only did you get a booster shot, but your pocketbook did too.
So those guidelines and limitations from 2020 are pretty much reset.
Yeah, everything. Well, all of them expired. That was
Okay.
December 31st. Everything, reset and going back to it. Maria Padar, you have CARES. Now, this is not going back to the CARES. The American Rescue Plan was the last one. What was the CARES Act? What was that? I'm trying to think back. Be a little more specific what you're asking. But the American Rescue Plan was the last one. We did the biggest. What was that? Was that March 2021?
I thought, yeah.
Because it was three. It was three main ones. With the stimulus one, but the American Rescue Plan was the last one.
Okay.
And that was
CARES Act was in between the two.
Okay. And I apologize, but no, this not with that. The ERC. I'm gonna be honest with you. Even with we can talk about even with the ERC, the PPP and the ERC, all that they've been stopped issuing those out. So we know that already stopped over a year ago in regards to the PPP and the employee retention credit. All those things to stop. Even with employee retention credit, so much fraud going on.
Mm-hmm.
In essence, people applying for something that didn't happen, but it was meant for people that actually had paid wage employees,
Right.
But people just find some way to finesse it. And again, guys, what I want to give one common note while we're talking about today's show, stay away from this fraud. I mean, what right now, 2023, everything's digital, everything's electronic, everything's based with artificial intelligence. You think you smart, you think you know, it ain't worth it.
Right.
That damn $2,000-3,000 refund ain't worth it.
Mm-hmm.
It ain't worth it. If you're on the other side preparing, it ain't worth it.
Mm-hmm.
It ain't worth it. I'm just telling you. You think nobody's seeing you. You think you're being discreet. You think nobody don't know. A lot of times people just building cases and building portfolios on it. It ain't worth it. I mean, that's how I'm 20-some years in the game.
Right.
I done got some phenomenal offers and stuff like that. It ain't worth it. That's why I'm still here and I ain't did that but put money in my pocket.
Mm-hmm.
Except when I got a divorce. Lord. The next thing is the COVID retirement plan distribution. You had the COVID retirement plan distribution. We'll go into that. That this is the last year that you'll be able to claim those three disbursements for that, and then that'll be reported on your 2022 return. But we'll go into depth with that, explain exactly what that was. If you not familiar with it, more than likely you didn't take it, so it wouldn't be applicable to you anyway. Also, some other premium tax credit along with some energy efficient credits. Everything's going back. They did expand the premium tax credits. Some of those to 2025.
Mm-hmm.
Those got extended. Some of the energy efficient costs. They're going to affect in 2023, and we had a couple of them that were extended, some that stopped as well. One big thing I do want to let everybody know, and we did a video on it, but I'm not going to go over it today. If you were working in the gig economy with the 1099K,
Mm-hmm.
They let everybody know that 2022 you don't have to report any money that you might have made. The actual third party companies, the Ubers, Lyft, DoorDash,
Yeah.
they're not going to be reporting the 1099Ks if you made over $600. This is going to be a transitional year because they haven't finished working out all the kinks in regards to how everything will be done. So again, now I will say this: they don't have to report it, but if they they still can submit the money.
Mhm.
But I will say this, guys: if you out there making money doing that, and that money was hitting your bank account, I understand that banks also have a fiduciary responsibility with certain transactions and certain, and that it maybe sometimes with dollar amounts over $10,000. I'm sure you heard it, but also some or with the volume of transactions, some things are big. I've got the exact term, but it's not peculiar. But in essence, they can report certain things as far as a rash of deposits going to
Mhm.
your bank and everything that may be in an odd frequency.
Mhm.
Long story short, don't think because you didn't get anything to report the income that is not reported.
Okay.
Okay, just keep that in mind. So if
Mhm.
you actually made the money, listen, guys, go on and just especially if you hit a damn bank. Okay, you out there shining shoes, cutting grass and everything, trash, cash transaction. I'm not knocking any particular job. I'm just thinking of things off the top of my head that could be strictly cash transaction. But anytime you use any kind of thing that was electronic or there's a digital footprint,
Mhm.
it behooves you to report it
Okay.
because you don't necessarily know when the recourse come back and people may ask you about it. You know what I mean?
Right. Right.
So you got to be kind of careful with that in regards to that. So again, it wasn't required for uh, those third party agencies, i.e., Uber, Lyft, DoorDash, Grubhub, to make those deposits. They're going to do it next year.
Mhm.
And that just came out, I think, what was that, November, December? We did the IRS announced that. But they'll do it next year. They're just working the kinks out. But that doesn't mean income won't be reported.
Mhm.
So just kind of stay on the straight and narrow with that if you can, okay?
Right.
All right, guys. Again, tonight, I'm Deontay Berry, aka Mr. Short Out himself. Tonight's show, we're talking about income tax law changes for 2023. Feel free to call in 678-740-9894. Please keep it on the subject matter. First thing we're going to go on and just say with the earned income tax credit, the extended provision, some that were extended through the American Rescue Plan Act, they did expire as of December 31st. Um, Taxpayers, one big thing can't use one of the things with earned income credit. You can use the previous year income to see if you qualify. So if you made $18,000 in 2020,
Mhm.
and then you turn around and made 50,000 in 2021,
Mhm.
you could actually use 2020. That was one of the key things. They let you use the previous year
Okay.
to qualify for earned income credit.
Okay.
That's gone.
That's gone. Okay.
That's gone.
Okay.
Okay, that's one of the key things. Well, want to let everybody know they did increase the investment income. Again, you cannot switch years. You can't claim 21 income on your 22 return.
Okay.
Just so we clear on that.
Okay.
They did change or keep it effect and extend the time frame that you can be able to claim earned income credit for investment income. That's $10,300. Okay. Um, but as expected, the credit for 2021 is expected to decrease the benefit and the amount in amount in 2022. That meaning I want people to understand that those credits are going to have more of a decline in benefit
Okay.
over the next year or so. With doing that, the table's going back now. You don't have the exact same numbers that you had in 2020 as far as the max for the earned income credit, but definitely what it was last year. If you're actually the maximum for head of household, single head of household, and widow, the max income would be $16,000 with no dependents, $43,000, and this is for before you phase out
Okay.
for getting earned income, and that's if you're single, head of household, or widow. The max this was zero dependents, zero children, $16,000 income, $22,000 if you're married, filing joint, and the max credit you can get $560.
Mhm.
If you're single, head of household, or widow, and the cap for that income level to phase out of earned income is $43,492.
Mhm.
And if you're married, filing joint, the cap on that is $49,622.
Okay.
And the max you can, when I say that's the max you can make
Together.
before it phase out.
Okay.
So you're like, hey, we can't do it, and you can't receive the credit. So anything but
the 49,000 is for between both of us, me and my wife.
yeah, exactly.
So she made 25, I made 24. If we both made 30, we phased out
Exactly.
because we're making 60.
Correct.
Okay.
Correct. There you go.
Okay.
There you go. And the maximum earned income credit, because keep in mind we do earned income credit is a gradual number.
Mhm.
So you do have points where from zero to that, just to your question about the married filing joint, with one dependent, you got 0 to 46,000, depending on your income amount. It'll be a different amount that you would get for earned income. You just don't get the same amount.
Okay.
But you have a range where the max will fall in, and the max for that would be $3,733.
Okay.
Right? Remember, you can only get claim up to 2 dependents to receive earned income credit.
Mm-hmm.
So if you had a single head of household or a widow with 2 dependents, the income threshold is $49,399.
So let me ask you a question. You say you only can get 2 dependents. That's the max
for earned income credit.
So if I got 8 kids,
and that's under 16 years old.
Okay, so if I got 8 kids,
I mean, you can always claim them as dependents. But as far as the earned income credit,
so the earned income credit won't apply for each child.
No, it just apply for 2 that are under 16.
Okay.
2 that are under 16. Good question.
Because I'm just saying, because one time it's like give me all your children.
Well, no, you still get exemption. The $500, they have with that. Keep in mind, guys, we start talking about one key component. I want you guys to understand. We start talking about the difference between deductions and credits. Deductions just lower your taxable income. Just so if you make $50,000 and you get a $500 deduction, that changes to $49,500, right? But a tax credit will go back to you. Now, again, that's still gonna hit against the tax that you're supposed to make for a certain dollar amount. So if you're at a point where you don't have to pay any taxes because your income's so low, that's when you get the money back. Makes sense?
Right.
That's how that theoretically works.
Right. Okay.
And so that point with lab asking with somebody married filing joint, the gross amount that you can make as a couple would be $55,529 with 2 dependents, and the max you can get for earned income credit, that same thing, is $6,164. Okay. All right, guys, and that's earned income credit. The next one is child tax credit. Okay, and they got real jiggy with the child tax credit because everything's going back to the 2022 as of December 2020 numbers. As of December 31st of last year. And the child tax credit reverting to its original limitation of $2,000 for independent under 16 years of age. Okay, that answers your point. So again, even with it being applicable for the earned income tax credit, you still have to get that child tax credit. You'll fall there, and then you still got to be under 16 years old to get that.
Okay.
But you still can claim somebody like an uncle, your other older kids and stuff, but you're only going to get that actual small exemption number for that. If that makes sense.
Right.
So with that said, in the past couple of years, they were up to, it was 3,000. It was children under 6, you were getting 3,600, and from I think 7, and it may be 5. Correct me if I'm wrong, but it's 5 or 6. But long we know where the hell we at. But that was 3,600 that they were giving to you in the past couple of years, and then anything from 6 to 16 or 17, they were giving you 3,600.
Okay.
So now, regardless of either one of those, we're back to $2,000.
Okay.
So that's just something to think about.
$2,000 across the board.
Across the board.
Okay.
So you ain't getting 3,000, you ain't getting 3,600. You're getting $2,000.
Okay.
All right. So I want everybody to make sure that we totally understand with that. Okay. So that's one of the key things because everybody was getting fat.
Right. That 3,600, 3,000.
Yeah. And keep in mind the phase out for that is if you're making over $200,000, you're not gonna be able to claim child tax credit. That's if you're single at a household, and if you're a married filing joint, the phase out is at $400,000.
Okay.
With doing that, I think you make $400,000, you ain't worry about no damn $2,000.
No, right.
You got more important issues.
Right.
Right. So that's the impact that was made on the child tax credit. Guys, feel free to give a call. Got any questions or anything like that? You heard something kind of like, oh, what was that? I didn't hear it. But keep in mind, guys, like I told you before, make sure you subscribe to the YouTube channel, Mr. Short Dollar, because all the same information will be on the YouTube channel. So if you missed anything, you can always go back to Mr. Short Dollar on YouTube and check everything out. Okay. And one thing we just talking about people not being abreast with a lot of stuff. Do you remember the video that when I first had my first viral video? Do you remember that, Leo?
It was the grants.
No, it wasn't the grants.
What?
The first viral video I had. Hell, I was knee deep in that damn divorce.
I don't remember
No, before the divorce. It was the beginning of the year. It was when the pandemic first hit, and I did the video right there in my office in Riverdale. I said, hey, if you thought your tax person kept your refund, your stimulus payment,
Yeah.
Leave a comment below.
Right.
That shit was at 20,000 views in 24 hours. I mean, that was the first one.
Okay.
And I think that was like January or February 2020.
2020.
Right? Yeah, come on, divorce. Yeah, come on, wait, yeah, exactly. January 20, January, February 20. And it was just, it was cool to go through it, but what it showed me is how many people were just still clueless.
Mm-hmm.
To your point earlier about what was going on,
Right.
and I just did. That video was probably 30 seconds long.
30 seconds.
30 seconds. If you think they kept your refund, mine did. Damn crook, this, that, and you see all on the news. People were storming the tax offices, wondering why they stimulus checks, and the issue that was going along. And it happened the same thing with mine.
Mm-hmm.
Is that the federal government, the process is to go through when you get your taxes done at a tax office. Theoretically, the tax offices use an intermediary bank.
Mm-hmm.
It's only maybe like 5 or 6 actual tax banks.
Okay.
So pretty much everybody pretty much use the same ones, right? One of those pretty much software you use. So it goes when it leaves the tax office, it goes to that intermediary bank. It goes to the IRS. The IRS will say if you're getting a refund or not. They'll kick the money back to the intermediary bank. Mm-hmm. The intermediary bank will prepare his fees and will deposit the money in your account.
Okay.
The issue came up was when the stimulus payments came. The first one was the IRS issued all the money to the intermediary banks.
Right.
They didn't send it straight to your bank account.
Okay.
And that's what happened. So they had this log jam of, so people called checking their stimulus or looked online, mm-hmm. They looking like that's not my bank.
Right.
It was the intermediary bank, but that was a glitch on the IRS side.
Okay.
So what happened was all that money was sent back to the IRS. You had to go through the whole little process, and then go online, whatever. And that's how people were able to get their stimulus payments. Mm. But if you remember, it was just totally chaotic.
You're right.
Chaotic, man. Just what we were doing it. But that was just so funny because it wasn't funny then. Cause people ask me about threatening and shit.
Right.
You know what I'm saying?
Well, then you'll get my money.
What was that first one? Like $200? What was that first one?
I don't remember.
It wasn't. Was it $1,200? I can't remember. But it damn sure wasn't. Worth some of the stuff people said to me.
Some of the threats that were thrown across my way. Yeah. Mm. I get it.
But again, a lot of be attributed to really how much people be informed and stuff like that. It was just something that just run across the top of my head in regards to doing this. So again, we want to talk about these tax law changes for 2023. It behooves you guys to kind of be aware of it because a lot of times when we're not informed, people tell us a lot of stuff. Mm-hmm. Cause like you say, we said earlier, yes, tax person, well, that's what the computer say. Or I've had people come to me saying that they were told that they made the reason why they owe because they made too much money.
Right. That's
Who
always
the hell make too much money?
That's the reason. That's always the reason.
And a lot of times it's just that really, you just probably didn't do anything proactive to kind of lower your tax bill. Mm-hmm. But ain't nothing wrong. You got to pay taxes on income. Mm-hmm. So a lot of times you just don't necessarily have no strategies to maybe lower it and everything. But again, it costs doing business.
Right.
It is what it is.
Mm-hmm.
Again, we a lot of times just don't be aware of the benefit of what the actual tax getting charged, taken care of. Mm-hmm. But and we ain't got those, $1 million Trump attorneys,
right,
to lower our billions of dollars,
right, lower our tax debt. So yeah, you're right.
So you just really don't be informed on that. But that was the thing. That's why the whole point of this show, this channel, is to make sure people are informed about things for them financially. Ain't necessarily always gonna be the stuff you want to hear, mm-hmm. but it's always gonna be the right way,
Right.
And the next thing that we're talking about, the tax law changes for 2023. This is the child independent care credit. Keep in mind the child independent care credit is non-refundable. So a lot of the actual credit was increased. Everything's going back to the 2020 level. The expense limit is it went back to $3,000 expense limit. That's the most they could cap off at. And also it's $6,000 for one, $3,000 for one child, and $6,000 for more than one child. Okay, so that's just pretty much how that is, for being applicable. It's non-refundable. That means when it says non-refundable, that doesn't mean you have leisure to get it back.
Mhm.
This is going to be applied to the actual taxable income,
Mhm.
but you're not always going to be able to get that back. But
Okay.
again, just keep that in mind. But that has changed in regards to that. That's a big one. A lot of times people really don't take advantage of that. And I always tell people, make sure that whoever watch your kids, you're doing that. You're using that. What is the income phase out level? I'm trying to remember. Um, for the child for dependent care credit. Trying to see. There's no max on it, but I know it's only 20%. They look at 20% of a certain age, 20%. Any age you have 43,000 will
Mhm.
receive 20% of their eligible expenses. So again, if you made over $43,000 and you pay, let's do some easy math, $1,000, so 20% of that, fifth of that, five going 20, $200.
Mhm.
That will allow you to get back.
Okay.
Okay, so kind of keep that in mind, guys. It's always remember when we start looking at taxes, a lot of stuff are based on sliding scales. What I mean, depending on how much money you made, depending on how much taxes you paid,
Mhm.
everything changes. It's not usually $1 because a lot of times people, I let somebody claim my kid. That's 2,000. That's 3,000. Who the hell told these folks?
Right.
And the other myth, well, I pay half of the year in tax, the other half I don't. No, you pay taxes for the total dollar amount
Right.
that you have for the year. So if you pay taxes half, if you made $50,000 and only for 6 months in a year you pay taxes, the other six you don't, you're still liable for taxes on $50,000.
Mhm.
When you paid it has nothing to do with it. I don't know
Right.
who the hell told y'all that. People have done it for years. People assume, but that's
That's not right.
oh the hell it is, man. You pay taxes on the actual dollar amount that you made.
Right.
Again, once we start putting deductions in that lower the taxable income,
Mhm.
for whatever dollar amount you made, that adjusted gross, that's where in that taxable income, that's excuse me, what you're liable to pay taxes on, right?
Mhm. Okay.
No ifs, ands, or buts. I wish I could tell you a better way to go about it, but it is what it is with that, okay? The next thing we talk about is COVID retirement distribution. Hey guys, and this is something I took advantage of. So, like a lot of times when the pandemic hit, there were a lot of people that were actually in distress situations where we had to pull money out of 401k. And so part of the COVID relief was that they gave people the opportunity to take the distribution. Because typically, when you get the distribution, you have the 10% early withdrawal fee,
Mhm.
plus you got to pay taxes on the actual distribution. What they did with the COVID retirement plan distribution, they actually let you take the money out. So let's say you took out 30,000.
Mhm.
They let you take the 30,000 out and then claim only 10,000. Well, they waived the 10% early withdrawal fee.
Okay.
But what they allowed you to do was break it up over 3 years
Okay.
as far as
That's your
receiving the
income.
taxable income.
Okay.
So instead of receiving 30,000 on that particular year, they'll say you got 10,000 this year, 10,000 next year, 10,000 the last year.
Mhm.
2022 was the last year that you would have had be impacted by that $10,000. The funky part about all that is that they only looked at the taxes because you do the early withdrawal, they take the tax out, they take it with 25%. Am I thinking right? 20 or 25% of the taxes out, but all that was recognized that first year.
Okay.
Like you couldn't break the actual tax payment up.
income up over 3 years.
Yeah, you break the
take
income up.
$30,000, you paying tax on that 30,000.
Yeah, exactly. That year, that first
That
year.
first year.
So the second and third year, you just at 10,000 and 10,000. So it was nothing to apply the tax to from that. But that 22 was the last year for that to be recognized. So like I
Okay.
said, I was one of the people that did that because hell, I went through a damn divorce.
Right.
I gotta get it.
You need that money.
I gotta get it. She's trying to take it all. Trying to take it all, man. And that was it was very advantageous for me to do it, and I thought it was a pretty good idea. And a lot of thought was put into that. But again, 2022 was the last year for that to be recognized. So I want everybody to kind of keep that in mind with that. Another credit was this one that I took advantage of, and I really had told a lot of my self-employed clients that was impacted, by COVID because then everybody got sick. With that self-employed leave credit,
Mhm.
Form 7202, that's gone,
Okay.
and that was very very impactful. That was up to $15,000 a refundable credit
Okay.
that people can take advantage of if you was impacted by COVID. You could have caught COVID. Your dependents could have caught COVID, and depending on how many days that you were out due to that, you actually make could make that applicable to your income
Hmm.
to get a credit in regards to that. So that was just an awesome credit.
Okay.
That's gone too.
That's gone too.
That's gone. They were hooking people up, man. If you had somebody that actually was knowledgeable to do your taxes, you had, you kept good records, man, you take advantage of it. It really was some damn relief going on. But I think people just so stuck on the low hanging fruit,
Mhm.
i.e., PPP, disaster loans, and stuff like that,
Mhm.
and just didn't. I mean, you actually could have put yourself in different stratosphere, i.e., from government contracting, all these other particular things that were available to people, and people just, again,
Didn't bite.
just look at the carrot that's waving in their face.
Right.
That's all. That's all with it. So that's one of the things I just, those are some of the main things in regards to actual tax law changes. With that, you have some premium tax provision. They were pretty much all extended uh, up through 2025. That being some of the health insurance payments, those were extended with that. Um, there were a lot of things with it, and that if you bought the health insurance on the marketplace,
Mhm.
you was able to get a credit for the premiums that you wrote to that, and that was extended through 2025. That did not end as last year.
Okay.
So again, that was extended with it, and I think that came with that Inflation Reduction Act with that, and that was the last, I think, uh, bill that Congress passed. So they didn't give any money with that,
Oh, okay.
and I think that came back in the summer. Y'all forgive me on remember dates. I got a lot of stuff on my mind, but I
Okay.
think that was the one that came in the summer, the Inflation Reduction Act. It was some other fall when that came,
Mhm.
but again, no stimulus payment was issued with that. They just had different provisions for people to take advantage of. Let me see through my notes. Look through my notes, y'all. My mind don't work like it used to. Uh, a couple things, unless there'll be new legislation allowing some kind of extension, the following will expire. They did expire as of December 31st, 2022. It cannot be claimed on your 22 return. That PMI, private mortgage insurance deduction. Uh, there was this sick leave, the sick leave, like I just told you, the 7202, tuition fees and reduction act. You still got your American Opportunities Act, and you still have your basic credits you can get sometime with the tuition billing that you have.
Okay.
That but the American Opportunity Credit is still there. I'm going blank on the other one. That's there. Charitable contribution for non-itemized is what they were allowing you to do the past couple of years. It was $300 or $350
Mhm.
that they would just, if you itemized or not, they just let you go right on your return that
I gave.
you gave to it.
Yeah. Okay.
That's gone.
Okay.
That's gone. So again, I get all the yin yang. This is why it's so important, guys. If you understand, you got standard deduction, you got itemized deduction, and the standard deduction for each filing where you file is totally different. Be it single, head of household, married, file, joint.
Mhm.
The standard deduction is when you make 50,000. I think for a head of household is 19,400. You subtract that from the 50,000, whatever that number is.
Mhm.
That's your adjusted gross,
Okay.
right? That let's say if you have the money, and then we look at they're going to be what's your taxable income. Well,
Mhm.
from there, uh, when they did the Jobs and Tax Act at the end of 2017 or 19, one of my odd numbers, that when President Trump was in office,
Mhm.
they doubled the standard deductions.
Mhm.
So again, what happened? Well, theoretically, they got rid of a lot of those itemized deductions,
Okay.
but it made it easier. I mean, again, you couldn't. A lot of things went away. Like it made it more difficult for you to do charitable deductions because the number increased. But I think that it helped you out a lot because most time people still didn't have that much in regards to being able to itemize.
Right.
So it's just a different way of use. So sometimes we tax person say, "No, you couldn't use that. You couldn't use this, or you couldn't use that." More than likely, it was probably something to benefit you.
Okay.
It's just because when you get told you can't use it, people look at it from a different lens,
Yeah.
right?
Yeah.
But a lot of times when people tell you stuff, they don't tell you why.
Okay.
But that what is this? Accelerated appreciation of property Indian reservations don't apply to me.
Right.
And couple of little things here, little credits there, and I think those are more industry specific as far as like race horses and Mine Rescue Teams Training Credit. Okay. No.
Nope, nope,
That
nope,
was in
nope,
Georgia.
nope, nope. I
So
don't own no horses. Especially no race horses.
say, like, barely got a damn car.
Right.
You know, but you know, in a nutshell, those are some of the main things in regards to some of the income tax law changes for 2023. Again, guys, feel free to give a call in 678-740-9894. Again, 678-740-9894. Feel free to call in. You know, again, you got any questions, anything like that? Hey, the door open right now. But listen,
Let me ask a question
Sure.
before we go.
okay,
You know, we deal with, and I'm gonna record.
we got a little time before we go, but
Right,
I
yeah.
got you.
We, you know, this station, this platform, we deal with a lot of independent artists. So let me ask you a question. I'm an independent artist. I do a show. The show pays me, let's say, $2,000. But I also work a regular job. Do I need to claim that $2,000 on my taxes?
Yeah.
Like, even if they say, well, we're not gonna report this, don't worry about it. Well, somebody said, man, if they don't report it, you don't have to put that on your taxes. And sometimes, you know, independent artists doing a lot of things on their own. They might forget. But do you implore them to put that on their taxes regardless?
Yeah, you got
On
to
their
do it.
income regardless.
Yeah, you got to do that because a lot of times they're going to still make you fill out that W-4. And, you know, that tax person going to tell them, listen, they're going to say, we paid all the art. Like, just say if I'm a promoter or something, I got a show, you know, and I paid Lab $10,000.
Mm-hmm.
Why wouldn't I report that? That's an expense that I paid for a performance.
Okay.
So why wouldn't I report it?
Okay.
That's going to lower my taxable income. So, you know, again, the 1099 should be issued out for that. That's why typically they should fill out a W-4 to verify your income. You don't know. Again, you know, glad you asking this question. There is no excuse for ignorance. I didn't know they were going to do it. They said they wasn't. Now we're on words.
Right.
Yeah, lie. I ain't tell her that. At the end of the day, you still know you made the money.
Mm-hmm.
Okay? You made the money. You know you made the money. You agree to that, right?
Right.
You know, you got to pay taxes on it.
Mm-hmm.
If they tell you they were going to do it or not, that doesn't matter. Like, you follow what I'm saying?
Let's say if they don't even get the form with W-4. Well, let's say they don't even get a W-4 in the mail, or they get lost in the mail, or something happens to where they don't get the form. They still need to go ahead and file it.
Well, the W-4 is for the actual payer to verify they got a record. You know, this is your tax ID number, social security number, so they can issue out a 1099 at the end of the year. So, like to your question, just say they don't get a 1099. You still need to do it. And that's going to go through, and that's going to be part of your little pointers I want to get to people.
Okay.
Because you did it, you need to go and report it.
Okay.
If you did it, go and report it. Okay.
Yeah.
You know, again, we
just a little tax tip for all the independent artists out there.
No, I got you.
Yeah.
Hey, here's the deal too. Just say even when you've been an independent artist and stuff like that, you say, well, look, I don't want to do this, and you be on that, you know, way I want to get these refunds. Now you start getting to a point where you want to buy a car, you want to buy a house, and you got tax returns showing you losing all this money. Nobody's gonna give you a loan.
Right.
You know, and you know now I got to try to go through getting this into this person's name, getting in that person's name. You're not gonna be able to grow because you're actually not stating how much your money is and stuff like that.
Okay.
Do it right the first time.
Okay.
Do it right the first time. So here are a couple of tips, you know, I want everybody to kind of follow in regards to, you know, just going forward with your taxes. And even, you know, even what Lab said, just, you know, people be self-employed, you know, i.e. independent artists, business owners, things like that. You need to wait, and it's for anybody. Wait to get all your damn documents.
Okay.
All your W-2s, all your 1099s, your 1098 from your mortgage company. Wait. Here's the deal, because far too often people break their neck. I need to get a refund. And you know you worked that particular job, you know, for a couple of months, you know, at the beginning of the year, but I need to get my refund. What happens is two things, and it happened more the second way now than it had in previous years. You sit down and you go get your taxes done, and you understate your income. You'll tell the tax person you made $25,000 because that's what your W-2 show, or your 1099 show. You qualify for earned income, you get this big old refund. Everybody happy to go live their life.
Right.
5 or 6 months later, you get a letter from the IRS saying, listen, you did work at Keller's Pizza or whatever. You know, there was $8,000 you made. You knew it.
Right.
You just hoping it didn't go away because you didn't get it in time. They sent the stuff to you late. They get a penalty for that, for sending it to you late. But on the flip side of it is too, shit, you knew you did make the money.
Right.
And now what didn't happen? Because now the income didn't change. You don't qualify for earned income. You owe the IRS $4,000 to $5,000,
Right.
right? It happens all the time. And the second thing with that is that was one when you get a letter. What's happening more now because the IRS has mandated that employers get the. It used to be one thing you were supposed to get it to the actual workers by the 31st of January. Now they're making now you have to get it to the IRS by the 31st of January. So that's why they didn't issue out refunds after the 15th of February, so they can settle it up, right? That wasn't the case before the year before last, right? All these years. So what happens now is just say if you understate your income, you don't send everything in, your refund might be a little late in your letter in the mail. Hey, you didn't report all your income. We got this from such and such saying, you made this particular money. And now you're sitting there tripping because now you actually owe money to the IRS because your actual income is understated.
Oh, okay.
Wait for all your forms to get there. Wait for everything to get there. Even if you sitting there like, you haven't received nothing from these people, give them a call. You can call the IRS to kind of get some kind of guidance on what you need to do. But I will tell you this, if you understate your income, it's going to be very uncomfortable for you to get it fixed. Because this is one thing I want people to understand. I don't know how many of you guys have actually had in a recent interaction with the IRS. And we had the news clip where Larry mentioned about all these new thousands of IRS agents that are hired, but they're totally still understaffed. So when they're being understaffed, if you call the IRS and you can't get anybody on the phone, they'll say call back at another time, and the phone drops. So that when you need to talk to them and you can't talk, it drops. Imagine the situation you can be in. They done took all your refund. Now they saying you owe money. You could got a garnishment on your check, but you can't get anybody on the phone because you still got to work and you only available to call in restricted time periods, right? Where you can actually make a phone call, and during those particular times when you want to make that phone call, you can't because again, it's not even available to them.
Right.
To avoid getting these damn situations, do shit the right way. Do stuff the right way.
Oh, okay.
So I'm just saying, like, make sure you got all your documents, okay? And make some kind of, if you can, I say from December and January, start trying to make some kind of mental assessments of everything you did, okay? That being all the jobs you worked, all the gigs you did, all the money you put out. Just say if you got i.e. businesses, i.e. rental properties, whatever. Start doing those mental assessments for everything you did. Do that. That's what you got December and January for. But be very, very careful. You start filing tax returns and you ain't got everything in place, okay? Everybody be very, very careful in regards to that because far too often people,
right,
but you ain't got time to wait. I got to get my money in February.
Half the year.
I got to get my money in February.
Right.
They late sending your stuff.
Right.
So you figure it's on them. It's on them, but they ain't got nothing to do with you. You know you did it. They gonna have their damn penalty, and you gonna have yours. So
it all coincides.
The problem with you gonna end up receiving money that you weren't supposed to receive, and that's the issue with that. Right. So make sure you got all your documentation. Keep in mind again, guys. I said this earlier. Everything is electronic. Everything is electronic. There is a digital footprint. Don't think you are smarter than the computer. Don't think you're smarter than I'm just saying, like, everything you're doing, guys, you guys here, it's not as the same as, federal mail fraud and all this other kind of shit. But I'm just saying that you're doing things that got a digital footprint. Remember what I keep telling y'all, guys. I didn't know it's not going to be an excuse. You know what I'm saying? No one cares about that.
Right.
Still got to get fixed. I get it. They may say, okay, I believe it. We still got to pay that bill. You still got to get it fixed.
Right.
And that don't
change.
Yeah, that don't change anything. So keep that in mind, guys. Make sure, do it the right way. Another thing is, if you prepare your tax or your preparer, y'all got to be honest. If you got to be honest with yourself, you need to be honest with your preparer in regards to that. If you are looking at your return, you say, look, I don't want to pay these folks. I'm going to try to do it myself. Be realistic. Be realistic of the difficulty of your return. If you require a professional and your eyes, you kind of know at my level, I think I know what I'm doing because the computer asks me questions. It's not the same thing. You can actually pay somebody to do it 1 year, this year, and kind of look at what they did, maybe ask them if they mind telling you what's going on and try the next year. But if you got a certain degree of difficulty, depending on what you have, you think you're doing it right, thinking ain't required. You want to know? Yeah, you need to know.
Right.
So I'm just saying, be realistic. Cause I know we have so many. And if it's simple, I don't see that wrong with you using your tax, that Turbo Tax or H&R Block software to do your return. But you gotta be realistic about what you got going on.
Right.
Yes, your W-2 and your dependents. I get it. I ain't tripping.
Mm-hmm.
But you start throwing businesses, properties, investments, and things like that. Especially you got like stocks. Everybody want to be a trader and all that now.
Mm-hmm.
You get this big ass thick booklet from the actual brokerage company and stuff like that. You got to fill out that 8849. Then you got to fill out that damn Schedule D. You got this other kind of stuff. You got them 4562, which is appreciation. And then you got Schedule E. And you just like, what the hell these numbers I'm talking about? And you playing around, you know what the hell you doing. It behooves you. Now, again, I ain't talking about fine. Okay, my girl Jasmine just started doing these taxes. I'm going to let her do it. No. No. Go somewhere where you got some kind of recourse. What I mean by recourse, at the end of the day, they do it wrong, you can go back and say something to them. Not the fly by night. And I ain't talking bad about nobody person, people, nobody's business, but be realistic about who you talking to.
Mm-hmm.
You know what I'm saying? Just be realistic about who. I ain't heard me do no advertising, no campaign, the whole damn show. But I'm just telling you out of experience. Be careful who do your stuff. Be very, very careful on that. Okay. And lastly, guys, going to that point, don't sacrifice quality for price. One of the first things people ask me, the first damn thing, how much you charge?
Right.
How much you charge?
Right.
Don't ask me about no malware, spyware. None of y'all guys have any past, things with fraud or anything like that.
And your employees take numbers and get credit cards.
Man,
they don't ask none of that.
You're gonna give me all your personal stuff. The funky part about that, people they'll be to me fake protective of it. Oh, I don't want nobody know my social. I don't want nobody know my social. But you want to go to this cheap ass person.
Right.
That they can't pay for no antivirus software. They can't They can't afford no because you ain't charging. They ain't charging that.
Right.
So they ain't got no damn cybersecurity and nothing like that set up to protect your social, your bank information, your kids stuff.
Right.
Look, I'm just saying this is a one-time transaction that can protect you. You need to be very, very careful who you give your stuff to. I'm just saying, okay? Hacking is real.
That's true.
Hacking is real. And I've never been a victim of identity theft, but I've seen it far too often. There is some BS to get straightened out. There's some damn BS to get straightened out. And try to move forward from it. So you need to be very, very careful that. Again, don't sacrifice quality for price, guys. Please don't do that. With that said, those are some of the basic, tax law changes for 2023. Hope you guys enjoyed the information. We had a great show. I felt like with it now. With that said, I'm gonna give a few minutes. Open up the floor. If you got any questions, comments, you can put it in the chat or you can give us a call at 678-740-9894. Get a number at 678-740-9894. Anybody got a question, Lab?
No, not yet. How the tax courts doing? You ain't mentioned that yet.
Appreciate it. Again, guys, we got the Mr. Short Dollar Tax Course. The link will be in the YouTube channel in the description section with that. I don't even know. I haven't even looked. To be honest with you, I hadn't even looked at it. So I've been so engulfed with trying to get stuff together. I haven't looked, man. With doing it. Okay. I'm starting doing hard promos next week, and I said it the week before last. But so in the totem, it's there.
Okay.
But in the totem pole of things and stuff like that, we're doing it. It just ain't priority one.
Okay.
We're doing it. So I haven't even looked, Lab. I want to, the revenue kept on suspense file, so I couldn't tell you.
Okay.
And I don't understand stuff like that. But again, what Lab is asking about the Mr. Short Dollar Tax Course, I created a course when I put over my over 20 years experience of it's set for people that actually want to start a tax business or currently in a tax business, because typically like what we were talking about before, you got so many people that actually get a tax ID or get a EFA number or the PTIN numbers to do taxes. You post on Facebook, you post on Instagram, and you can get in the damn business. You try to figure out what the hell going on. And what I'm trying, what I did with the course was explain to you, okay, how to market your business, how to advertise your business. I gave you the whole game in regards to if you want to run a brick and mortar type of office setting or a virtual setting, how to do it from the intake when they're coming in, how to do the processing, and when they're leaving out, how to maintain a relationship, how to build a referral culture where people feel indebted to bring new customers to you, right? I also gave you my marketing and advertising calendar to let you know what you need to be doing all year long at different sections of the year in order to actually acquire new customers, also maintain a relationship with the current customer you have. All of that is in that course. So check that out. The Mr. Short Dollar tax preparation course. Again, I put everything I had. I had everything I had, and I also even offer additional coaching. Once you get the course, if you need it, just talk over it. But it's super simple to do. I got all my forms, maps, grids, letters, all of this stuff is included. Well, you got all this stuff. It's not just me talking. I'm giving you the words, the game, the experience, the knowledge, and all the forms and diagrams you have to be successful. Okay, again, that's the Mr. Short Dollar course. You can go to Mr. Short Dollar on YouTube and look at uh, uh, the description section to find it. I got a question here. What's this? Lance, I apologize if I'm mispronouncing. I think it's Lance Interiors. What do you think about the program, TaxLayer program? I mean, for the software, I think TaxLayer pretty good software. We use TaxLayer on I have two companies, Majestic Business Services and Majestic Accounting and Tax Services. Majestic Accounting and Tax Services is 100% virtual, right? That's why it's 100% virtual service. That way everybody works for me, remote prepare, and we use TaxLayer for that. TaxLayer is a great software. Is my main software I use is Drake. Drake, you need to be a little bit more experienced for using Drake because it's straight. There is no Q&A.
Oh,
So you need to know your forms. We're actually using Drake, but you have a whole bigger database and accessibility. TaxLayer is more set. If you're new to the business, we're doing it, and they have a great Q&A. But the biggest thing with TaxLayer has a remote service.
Okay.
So that has allowed me to do that. So I mean, it's a good software. Most of your main softwares are pretty decent in regards to that. It all depends on what you. I'm gonna be honest with you. It really depends on what all you're trying to do with your tax business. Okay. It really depends on what all you're trying to do with your tax business. But I think it's a good software. Yeah, I think it's a pretty good software. With doing it, and I will get one little free nugget to everybody. I always kind of keep in mind, and this is one of the things I always tell people when you get in this particular business. Make sure your price is right. I'm a good tax person, but I damn sure ain't the cheap tax person.
Right.
And you got to make sure the math always gonna work. When you start talking about rent, software, insurance, and things like that, you got to make sure you covering all your actual operational costs. If you actually, doing stuff, you're good for the hood, and you just want to make sure you just want to do some, hustle here and there.
Right.
I mean, you might not be looking at it like that, but again, the recourse. It's cool to get money.
Right.
Once you start getting notified and letters and stuff like that,
It's
you
different.
don't want to do that.
Right.
And like I said, I mean, I've been fortunate enough over years. I ain't had to deal with a lot of that stuff because, my mentors helped me get set up. They helped me get all those kind of things, put in and stuff. What was the thing? Okay, thanks. Cool. You're very welcome. And subscribe to the YouTube channel, Mr. Short Dollar. We got, like I said, over 600 videos, a lot of informative information in regards to just tax preparation business. I actually got a video probably come out tomorrow or Saturday in regards to the main mistakes that tax preparers make. So that's be on Mr. Short Dollar YouTube. I haven't released that yet. I made a video a couple weeks ago, but that way you can kind of help you in regards to just going back checking certain things because we're human. Especially when that money start coming. Oh, I got it. I'm done.
Right.
Some of the most simple stuff we miss out on. So go to the YouTube channel, Mr. Short Dollar, subscribe to the channel, and check that out. What's this? Prince Kyrie 777. I have a PTIN number. Well, PTIN number, that's your prepared tax ID number that allows you to actual process tax returns for profit.
Okay.
With doing that, that's just the basic you have. You can have a PTIN number and go from different. Like you have to have that to actually prepare a tax return for profit.
Okay.
And then you have what you call an EFIN or electronic filing number. That's when you actually have the partnership with the IRS to be able to electronically file.
Okay.
And transmit tax returns with that. But it's a little bit bigger process.
Okay.
And on the course, I give you the whole blueprint in regards to what you have to do to get your PTIN number and your EFIN number.
Okay.
With doing that. If you have your PTIN number, okay, cool. And I appreciate you tuning in. And that's Miss Lance Interiors. And please forgive me if I'm mispronouncing anything. But Prince Kyrie 777. I'll say this, having a PTIN, it's a great business to get into. And I always be straight up about it. Hey, listen, it's been good with me. With doing it, the early 2000s, the rapid refunds and all kind of stuff. I had 5 offices.
Right.
So what I'm saying, I'm high on the hog with doing that. So it's totally different now.
Right.
It's totally different in regards, the business actually got more people, just to be able, like the self-serve community we're doing it and stuff like that. But I always say that keep in mind, everybody in the United States with a job got to get their taxes done.
Right.
There'll never be enough preparers
To get them all.
to satisfy that.
Right.
The key thing is you got to understand what you're doing because everybody not to go get them. Because because you got your tax ID number, your LLC, your PTIN, EFA number, whatever, you find out very quickly when you start posting on social media. Your friends don't want you to know how much money they make.
Right.
Your family members don't want to know, and they really ain't so comfortable with you doing their taxes because they don't know. They worry about, do you really know what the hell you're doing?
Right.
You find that out very quickly, and so that's what happens is people start doing it, and like, damn, I got all this done and all this stuff started, and then nobody want to come. Now you see the whole, you don't want to support the black business, you don't want to do this, that, and that, and it's not that. That just you got to crawl for your walk.
Oh, right.
Get them scars, got to pay them dues. It's gonna be gradual from year 1, 2, 3, 4, 5. Once you pass year 3, and you be realistic about what you can do. You know what I'm saying? I always say, first year 10 to 20 people, second year 20 to 40 people, fifth year you might be knocking at about maybe somewhere in the same.
Okay.
Right? I'm sorry, about that third year rather. And then you can kind of grow from there, especially depending on if you're doing it like part-time in addition with a job, because you got to sit here and be realistic. Who's going to come to you?
Okay.
Now that's if you're doing it. Now, if you're doing stuff illegal, you're trying to hook folks up and all that kind of stuff, you'll get people to you. But again, I just told you, that digital footprint.
It's going to catch up to you.
It'll catch up to you.
PPP thought they were doing something too.
Well,
and now they knocking on doors.
Like I'm telling you, right now, man, with the advent of AI, man, them software looking at all kind of trends. They looking at all kind of trends. So if you got trends on your PTIN number or you got trends on that EFA number, shit, you finna get a call. You finna get a call. I'm just letting you know. When I say trends, I'm talking about things like everybody's getting this certain credit and this astronomical or whatever and stuff like that. I always say, keep proper records. If I put on your tax return, I got some kind of documentation, right?
Right.
So you just make sure again you can do very, very well in the business, but just do it the right way. It ain't worth it. You lose all that money in legal fees trying to get your stuff out of there.
I'm gonna give y'all one little thing that has to do with electronic tracking, and it don't have nothing to do with taxes, but this is just show you how the government works. Lady said that they had this thing in the world where it would electronically track forms that was declassified. And lady said, well, no, we don't want to spend money on that because on declassification, we spend $100 million. We need something that classifies, that catches classified documents. So they spent $18 billion on classified documents.
Yeah.
So they have programs now that are catching classified documents. So if they're spending the money on catching classified documents, well, how much money do you think they're going to spend on catching you not paying them taxes properly?
It's already done.
You get what I'm saying?
It's already done.
Right.
It's just a lot of times just because things, what I always say, just because you get things accessible to you, that don't mean it's good for you.
Right.
And just because you're able to do it, that don't mean, okay, just,
you
it's
should
like,
do
hey,
it. Right.
still going to go down the right and wrong.
Right.
Did you know you weren't supposed to do it? You say, I don't know where you weren't supposed to do it. You still got to pay the damn fine.
Right.
Just at the end of the day, it ain't worth it. And hell, I might give you a little damn credit if you overcharge and you say, okay, now, but most times you ain't gonna have enough damn money to pay for your legal fees.
Right.
So it ain't worth it. You can make a lot of money in the business if you do it the right way. But I think you need to be realistic on the first couple of years in regards to learning the business and acquiring customers. If you can go through those first 3 years and have realistic goals, like I said, 10, 15 that first year, I think it's fair. And I'm talking about you just independent. I ain't talking working in the office. Because you also gotta know your tax laws, understand processing, with certain things, how to handle people, how to talk to them, how to answer questions. Because what you don't want to do is nobody's gonna know everything, right? That's why you go in a doctor's office, they got medical books. You go in an attorney's office, they got law books. But nobody know every damn thing, right? But at the end of the day, you got to be an expert in knowing where to find the information at, right? And you got to be smart enough to know that. And so when people start asking you questions, and I don't give you my personal information. You got all my stuff, and you sitting here like, hell, I don't know, and you doing the same damn thing they doing, Googling in front of them. Shit, you ain't gonna be in business long. So you got to kind of just be careful there. So that's why I say it's all gradual. You learn, you perfect your craft, learn at the same time. What we got right here, and file a Schedule C, fraudulently getting hooked up is a no-no. Absolutely. And one thing about it, guys, you got to understand, Schedule C's, that's a profit and loss for a business. We're doing that. Schedule C's, rental properties, those things get, again, they get audited quick, very quickly,
Really quick.
very quickly. Because that's where, you got a lot of fraud coming in with doing that, right? So you just be careful because a lot of times people can actually be able to put themselves in a position if they hadn't been working to say, okay, I got a dependent and I haven't been working, I've been stripping, I've been plumbing, I've been, a painter, and qualify for earned income very quickly with doing that. Guys, keep in mind, glad I'm even thinking about this. On next week, I'm going to release all my videos on how introducing what the form is, how to fill it out, and how things transition. The form for the Schedule A, Schedule B, Schedule C, Schedule D, and Schedule E. All those videos will be released next week. And so when I introduce the forms, kind of give you exactly what this form is for, what information goes there, what information you need to have to fill it out, the purpose for it, and actually when you fill it out, how does that information transition back to your 1040, right?
Okay.
So all those videos are going to be released next week, all right? And we got, again, that Schedule A, B, C, D. We already have the video there. I did that last year on how to fill out a 1099. I'll probably do a video on earned income tax credit, kind of give people an idea exactly with that. As well, just kind of give you an idea, just be more for informational purposes. So be on the lookout for that. But all that will be released next week. So again, it behooves you. Go to Mr. Short Dollar on YouTube, subscribe to the channel. It's too much information for you to take advantage of.
Right.
Okay. And also, guys, if you got a little taste for a little flavor, you can go to my other YouTube channel, Change the Life, hosted by yours truly, Deontay Burden. That's more like we've transitioned that to more like a Black fatherly advice channel. And, just we talk about life issues and this and that. We had a video we talked about earlier where I told people not to be going broke, going through a divorce, fighting about stuff that you can attain back later. Right. And that video, man, I in 30 minutes, that video had 2,000 views. And the comments, don't do that. Everybody going crazy. But what it tells me is that there are a lot of people that have went through that situation of divorce. And I actually, like I said, what I learned to not do going through my divorce was fight about something that I could get back later.
Right.
That was a very learning moment. Just looking at a lot of my friends that went through divorce. Like, shit, I can get another house.
Right.
I can get another car. I can get another pooch.
Right.
Like, look, man, hey,
Stroke out
here. I get exactly, man, exactly. So even if you turn around and get it, you put yourself in a position, you don't spend so much money on legal fees, you can't even afford to keep it. You're like, yeah, I kept my house, but hell, all your damn accounts zeroed out, all your cards maxed out, and the only person happy is the lawyer.
Attorney.
Yeah. So you can go to Change the Lives, hosted by yours truly, Deontay Burden. You can Google Deontay Burden, Burden, or Change the Lives and Deontay Burden. Google that or go to YouTube. You see the little blue man icon. So again, I put in a lot of work with everything in them channels, man. So we've been working hard. And also, guys, last but not least, check out Misfits Radio and Misfits TV. That's my Misfits TV and Misfits Radio. That's where we live at the lab here. We do these weekly shows every Thursday here. But I'm always doing other stuff independently at the crib, but maybe at my business office. But also part about Misfits Radio, Misfits TV, there are different channels on there, different shows rather, every day of the week.
That's right.
Well, we got like 7 shows left.
Yes.
You got comedy, got your gospel, you got your music, you got you high on Sundays. And them brothers do be high.
Right.
But they have a lot of great information and everybody pretty good, everybody passionate. And we've been doing this for over 5 years now, Lab. Yeah. So we've been putting in work for a while with doing that. So y'all, please, you get an opportunity to check out Misfits Radio, Misfits TV. Google it, go to YouTube, put it in, and subscribe to the channel from there.
Appreciate it.
Yeah, anytime. We're one big family. We've all helped each other grow over the years, and we all give a lot of each other a lot of love and support. So definitely check them out as well. So we're gonna go on and wrap everything up. Be back next week with Change the Lives. If you guys have any questions or comments that you may come to your mind later on, go to the Mr. Short Dollar YouTube channel. Leave a comment in your question or comment in the comment section, and I promise anybody knows me, I will. You're quite welcome. Anybody knows me, I will get back with you. So just if you come in later or whatever, again, even if, depending on where you coming in on tonight's show, go to Mr. Short Dollar on YouTube and check out the whole show and take advantage of all the other great information we have currently on the channel. Listen, that's the end of the show. Everybody, no questions,
No question.
no calling in.
No.
Oh Lord.
They gonna
Listen.
call in on change live. That's more they feed.
Yeah, more okay.
Yeah.
Okay, it's cool. We're gonna rock it next week. But listen, guys, love y'all. Y'all take care. Be safe out there, and I'll talk with you soon, okay?